All right, folks, come on back here to the Diagnostic Trading Hour right here at TFNN, TFNN.com. We got Tiger TV, TFNN.mobi. We got mobile radio commentary anywhere, everywhere you are. And we got Tiger TV broadcasting live right inside the e-signal platform. Let's check out where the markets are at today. We've had some pretty decent volatility. We got the S&P is currently down 10 points after running up quite a bit. We got the Russell down 5, Nadex down 16.5, with the Dow down 97. Copper currently down 0.5%, gold down 0.25%, silver pretty flat on the day compared to settlement. Oil right now is down, or up, I'm sorry. Gold is up just a couple points there. We got silver again flat on the day. Going on over to oil. I cannot get my words right. Oil's on up 57 cents, a little over 0.5%. We got natural gas up 1.5%, a nice move there. We got corn currently up about 0.5%. We got soybeans up nearly 1% on the day. Pound dollar up 20 pips. Euro dollar up 15. Euro pound pretty flat, up 3 pips. Got the dollar franc down 15. U.S. yen is currently up 9. Euro yen up 21. Aussie yen down 16. Aussie dollar down 35. And we got the bonds up a little over 0.5%. All right, well, that gets us caught up right there. Let's real quick do a review on the news. Frost Friday, I went into a lot of detail on the news trades, so we could have a little more time doing some market analysis this week. But let's go in and do a quick review here on the 29th. This morning we had the U.S. pending home sales. Let me go ahead and pull that on up. And we'll come back to the S&P here in a little bit. But right now, going on down, looking at the euro dollar for this potential trade setup here. We are looking at a iron condor and entering at 9 for an 11 o'clock. And looking for a 10 a.m. release, and looking at a potential profit there of $25 on the trade. And let's see how it ended up. All right, so backing on down here. I need to load up a different template, but we'll get this one knocked out. So right there, euro dollar going over here to 9 o'clock. And again, we took that on over to 11 o'clock. Ended about 27 pips off, pretty much a break-even trade. Give or take a couple bucks, depending on exactly where you got filled. But, move the expectations. Unfortunately, not less than the expectations. We don't usually expect it to move much more than that at all ever, and then pull on back in. So, pretty close trade. Let me clean this up, make it a little bit easier. We'll dive into, let me just load up magnets there. It'll be a whole lot easier. And we'll look at what else we got going on. We got the pound dollar. So let me go ahead and load up the pound right here. And, oh, wait a minute, I think I may have a little data feed issue. 1 second, let me load that in. And we'll get rid of that. There we go. All right, so let's try that just one more time, because like I said, I think my data feed was not loading correctly. All right, and now that that's up, let's switch over to pound. We'll come back to euro. I just need the chart to load fresh for me. There we go. And we'll come on back over. Now we'll go back on over to euro. I don't know why that connection had an issue, but I always have more than one just in case there is an issue. Okay, so looking on over here, looking at the 9 o'clock to the 11 o'clock. 26 pips. Okay, so we were good on that. That's good. All right, now let's go on over, check out the pound dollar. Pull that one on up. And on the pound dollar there, looking at, we had a trade, that one's going to come up this evening. So let me go over that trade with you so you're ready for it. We got an 11 p.m. to 7 a.m. We're looking at an iron condor on the pound dollar with their final GDP, their index of services, revised business sentiment, and consumer or current account. With all that, we'll be entering it at 11 for 7 a.m. May have to wing into it, or leg into it one side at a time. But I'm looking for 11 to 7, and we're looking for a $30 minimum profit, buying the lower spread, selling the upper spread. We also have a trade on the euro dollar at the same time with their unemployment rate, Italian preliminary CPI, German bond auction, core CPI, CPI flash estimate. Basically the same trade, except for this one we're going for a profit of $30, entering at 11 for a 7 a.m. And tomorrow morning, again, just doing you a quick wrap. We're going to go through the entire news plan now. But tomorrow morning we got 7 a.m. to 9 a.m. on the dollar CAD with their GDP, RMPI, and IPPI coming out at 8:30. And again, looking for an iron condor, somewhere around 20 pips on that trade. And we got one other trade, I think. Nope, no other trades except a lot of Be Aware events, China holiday, stuff like that happening tomorrow, Wednesday. A lot of Be Aware events. I went over all those last week. Okay, well, now that we're caught up, let's back up. Let's check out some of this indice activity that we had. Let's start off. Let's go back to the S&P. Put that one up there for you. And on the S&P, looking for, it's pretty, Friday is pretty critical. Levels there at 1956, 51. Massive band right there. Critical movement coming together. And on that, we also actually had that as a deviation level for today, exactly at 1956. We were expecting a move down to it, and then a bounce right off of it, and we did get that bounce. And that lines up, if you back up, look at that. We basically bounced off the exact same level last week, 1956. So holding that same price level, comes on down, hits it, bounces right off of it. So the exact same level as last week on the low. That's always important to check out, previous day highs and lows. That can be very helpful. But we were looking at that level anyway when I went through the market analysis. But let's go ahead and dive into, let's see here. It held there, had a little recovery on up to 77.78. Pretty nice recovery. We have not reached that level again since it dropped back down to 1956. So 1956 being a critical level, coming back down to it, bouncing off of it. We had a move on back expectation back on up to, somewhere between 71 and 69, 1971, sort of a range for a magnet there. It did bounce on up. It hit 1973, so just a couple points above. It could have, broke obviously above that, but that was really what we were looking for. A break below 1965 we were looking at as a retest of the 56.51. That did happen. If you go over here, so if we go over here and we got that break on down below 65, we were looking for a retest of this level. We hit it, we retested it, and then looking for a bounce on back up to the 71-73 range, and that did happen. So that gave us, the shorts, that gave us the longs to go on back up. And with the stop really down at 1945 area was really where we'd be looking for potential of the market to really, break on back down. If it did break down further, we could get down to 45, then 38, 36, then 33, which would meet the 5-month trend support line all the way down to 1928.27. Immediate resistance right now above us is at 1978.79, just above settlement. So that's also the one deviation high level that we got from yesterday. Okay, if it triggered above that, on up to 1985, then looking for potential selling opportunity if we get all the way up to 1990. But I don't think that's happening today. Okay, so we got this short going on back down, and what was that break level I mentioned to you just a second ago? Let's see here, recovery down 79, 79, 78, 71, 69. Okay, so we're breaking back down below this level, and we may go back and retest. So there's really two key levels right now that the market, I would expect it to focus on for the remainder of the day on the S&P, and that'd be right up here to 71, okay, area again. So right back up here, and then the other key level would be a move on down, potentially back down to retest 56 before the day is said and done. Those are really our two areas. That's the zones we were looking for today, and like I said, it's busting right through those. So hopefully we'll be able to get maybe a couple more trades out of it. It might be done and cooked for the day, but that's where I would expect that by 4:15 we may be able to hit one of those levels again. So we'll have to see how it ends up, but that is the market wrap analysis for the Russell. All right, let's go in and let's check out maybe a commodity, okay? Let's hop on over. Let's check out oil. Dive on into oil, do a little analysis for you, see what we got. Right over here, and bringing that on up. And on oil right now, we're sitting up at 0.5, which is a little above the one deviation high to low move that we had. It had a key resistance there, and I'm just trying to put all the numbers together for you. Oh, I'm looking at my Brent. Let me hop on over to my WTI. There we go. Okay, so on the WTI here, we had a triple bottom. As we were looking at that last week, and that triggered a pretty good recovery, and on oil, which is what we've been seeing so far. So hit that triple bottom right there, and then popping on back up. If you back way out on the charts, and been recovering up nicely. So the cover still has a little bit to go, but we beat the 9130, or sorry, 9310, 9320 level right out of the gate this morning. So it was sort of a drop down. We opened up right here on the 28th, 29th, so I wouldn't really even count that. But coming on down here, and then popped up above 93.10.20, came back down, tested again, popped up, hit it really hard on settlement, and then popped on back up. So we definitely have beat that 93.90.20 day. So not really looking for a big move down. The furthest move down we were looking for was 92.80. We hit that before we went on back up. Market under pressure and looking for a move on back up. 93.45.55 being the zone. So we still have a little room in the analysis there to move on up. Not a whole lot more. We got about 20 more ticks maybe of expected movement built in, just above this 0.7 deviation level. Moving on up, like I said, to the 94.20, 94.25. At that point, I'd be looking to probably go short as high as 94.50, okay, and expecting a high for the day. We're definitely looking to, say you're wrong if you did all the way up to 94.90, but I don't think it'll get that high. So looking at about 94.50 probably is around the high of the day, and looking to, get ready to get short on that, sometime after it breaks. We've already broken, so let's see, 93, about 94.20, 94.25, we're at that level. So really looking for shorts now that we're already at the 94.27 level. As high as, like I said, 94.50. I think that'll be our high. So we're getting pretty close. And that's a quick little oil market wrap for you. And just being middle of the day. Let's go ahead and let's see if I can check out if I got it. Let me pull up let's pull up the Russell. We'll hop back over, check out another indice. Let me move on down on that. Give me a second, see where we are on the Russell. And just trying to give you a little help here. I know a lot of you out there trading Nadex right now and hopping in on that big trading competition. So we'll see where it ends up. So we're starting to hear some good reports already from people. All right, you stay right there. We'll be back right after this break. All right, folks, going back here to the Diagnostic Trading Hour. Okay, and now, oh, wow. Got some issue here. Hold on. There we go. Okay, Diagnostic Trading Hour right here. We're checking out the Russell to see if that will work. And where are we at? We're on the Russell. It currently ran down a full deviation, back up a deviation. And let me go in, pull up my trade plan. We'll walk through it step by step and sort of, go through the day, talk about it, see what we might have left remaining on the day that we can take advantage of. Okay, so right now we're sitting at just above a 0.5 deviation level after bouncing off a settlement, which often happens. This phenomenon or whatever is known as a gap fill trade. Okay, and that's when the price opens lower than where it closed. It closed at 1114.1 on the previous cash session there for 415. The settlement price, and then often it goes back and fills the gap, which basically when it opened up, it was down a full deviation on the day, and we got a run all the way back up to settlement. Looking at the Russell, we had a nice little recovery before, beating 1109, 1118.21 area, still a good selling opportunity, but we didn't quite hit up to that area. If we did break above it, we would definitely have a move on up to 1133.35. So we'll have to look at that for a future day as a plan right there. And let's see here. Up at 1140 would have been a good short. So you can write down those levels to use them maybe on tomorrow's trading plan. So the longer-term pattern looking over at the market, what we're looking at right now is a negative view and a move on below 1109. We got that move on down below 1109 right here, and that seemed to be a pretty critical level. As you can see, it hung out right at 1109 before dropping on down to one deviation. And so giving us a retest here, these are the September lows. So August, September lows, 1100 to 1103 range. And we actually, not only was that a deviation level, but it was also a test of the lows over the last couple of months. And then if we would have moved lower, then we could add some pretty massive pressure on down, going down to, let's see here, 1109, well, that wouldn't have been 1190. So Let's see here. I think I got a typo on that one. Got 1090. So it would be the next move down if it was to break on down below. That'd be our next target. And let me see. So there's really not a whole lot left except for just an oscillation between those two levels. 1100 again being the retest level. That I'd not be surprised that we go back down and possibly test that level out after bouncing off a settlement. So that'd really be my next target on that. And that's all we got. Not a whole lot for the Russells. Hopefully we'd have a little bit more, but there just wasn't as much there as I was looking for. Diving on in, checking out the Nasdaq. And let's pull that one up. We'll look at it, see where we're currently sitting over here on the Nasdaq. Give me 1 minute. Load that chart up. We'll dive into it. We held the 5-month trend line at 39.99. We went back down and tested that again. So down there at 39.99, retested it. We talked about that, I want to say Thursday or Friday, but we hit that and right down there, held it, bounced right back to it again, held it again. So really seeing a very similar pattern, of course, across the board here. And let's see here, move on up. What are we looking at? So when it held it and basically marked the exact low and jolted on up way past the targets there, 1432, which is where we're just a few points above that right now. So basically the exact same trade. I mean, 4,000 up to 1432. We'll see. Nasdaq's looking like it wants to have a little more strength and trying to get it all back. We'll see if it leads the way today. If it decides to push on up, then it'll probably pull the Russell and the S&P with it. If it goes on down, then we'll see those other two go back down and hit their one deviation level. I don't know if we're going to go all the way back down to that retest, but just definitely make a note of that very strong level there at 39.99 as being that major support line. And a lot of trades you can play off that level right now. Let's see here. So we got 4053 moving on down. Now let's see if that's holding still. Yeah, 4053 didn't even get all the way quite up to it. So just trying to come up with some plans for you that will work for the rest of the day, but I'm not just seeing a whole lot at the moment. We got so much of the movement that already happened in the first couple hours. Great morning. Lots of volatility. Nighttime traders, awesome. Morning traders, great trends happening. So hopefully you're able to get a little bit of that. Let's see. Market we don't look at too often. We go in, we could, we'll check out copper. So there, we'll be back right after this. All right, folks, we're going back here to the Diagnostic Trading Hour. All right, so figured to check out the DAX, pull that one on up, look at it. So copper right now wasn't looking as interesting to watch. But with the DAX there, we went down, and yesterday we were, not yesterday, but Friday, we were able to go in and hold that 94.56 level, and it's pretty strong resistance there. Then the market gapped on down and was not able to break on back above 95.50 at all. It just headed down and bounced back up a couple times. So with that lack of hold, we had to move on down. What we were looking at a negative outlook on that. Down to 95, 25, 95.20. We easily, moved on. We were down at that 95.20, but like on the gap. So since we were already at the 95.20, 95.25, then we're going down to 9,500. And we moved on down to that with absolutely no issue. Retest down, looking at last week's lows, going on down to 94.66. And again, we hit that early in the morning, like 3 a.m. So plenty of time there to take advantage of those simple moves, just bouncing between the 9,500 and 94.66. And the outlook being very negative over on the DAX. And so looking for a big move on down to 94.20. We went ahead and we hit that 94.20 level right at the 2 deviation level. So pretty massive moves on that negative outlook. And looking at along with stops down at 93.70s being the low of the day, we actually did hit 93.70. I want to say to the tick with 93.71. See if I'm right on that. Yeah, 93.71. So right there around the 93.70 being where the stops would be at to go long. And now if it went on and it was able to break this level, this 93.70 level, say to break it, then we'd be looking for a move on down to 93.55, 93, and then on down to 93.25, and the next target from there, 92.90. So, and not really even to look at going long again on this thing until we get down to 90 to 80. So pretty massive moves down, still open, still available, and still got a couple hundred points we could easily lose on the DAX. So, but I'm pretty impressed that it's held true to the magnet levels all the way across the board. And if you are able to capture some of these levels along the way, then you can use them to help you in your own trading. Hopping on over, and let's see, what else do we got? We don't look at the FTSE. Let's check out where the FTSE is. And I analyze about 20, 25 different markets every day. And so I'm just trying to pull up and go back through some of these, and I want to start getting these out earlier to you. But I'm working on that process. All right, so checking on out the FTSE and looking at where we're at. And just, again, some massive moves there. You can see that gap down and, all the volatility happening right there. And not really picking up any real steam until we get into the, Euro session. That's when it actually starts picking on up. Well, what we were looking for, we got to move down to 1, then on down to 1.5, on back up to 1, and oscillating between the 0.7s. But getting right into it, FTSE hit a 2-year Fibonacci support level at 65.94. So just, for you, those of you that like to back up and check things out, bottoming out at 65.89. That was, on Friday there. And so we're getting to sort of an oversold condition. Might get a nice bounce on that. We did get a little bounce on it. But resistance, we're looking at that all the way up, okay? Just a resistance level to the high side for you. 66.55 is right about where we're looking at. And if we go back and look at, where we hit, then that's pretty much what we got right up here, looking back on the 26. So we got that bottom and we got up to that resistance level. Seems so far away, but really isn't that far. But that's where the resistance level was at from Friday. So some of the potential trades we could look at was going in and looking at potential support. 65.94, resistance at 66.55. We go down, we hit that 65.94 right here, bounced on up. You can grab that trade, bounced it down again, got a little bit lower, got down to that 1.5 deviation. Let's see here, but really basically taking profit at the midpoint. So just trying to line these trades up for you. What you could be doing while it's inside this is trading support when it gets down to 65.94, okay? And then taking a short if it gets up at 66.55, all right? And using the 66.20 level as the midpoint. So right there about 66.20, that's your take profit. 66.20. If you buy, get out at 66.20. If you sell up at 66.55, buy back at 66.25. So, a few points difference there. But going in and just literally playing that again and again and again until either one of those two levels is broken. Okay? So again, shorting up at 66.55. And probably have to stop some of your 66.55 right at 66.80. Okay? If it actually broke those levels, it could easily go up to 6,700, 6,710. So potential little pop on the way up. And where you could short again, if it hits 67.10, you could go ahead and go short with the stop up at 67.25. Again, I'm just going into each one of those. If you had to short again, then you could up at 67.40 would be another shorting level. Now, if you are able to break on down, if we really get a real break below the 65.89 level, and we went down, we tested on it, we bounced on it, bounced on it, bounced on it over and over and over again, pounding it really hard with that 1.5 deviation, not able to close below that 1.5 deviation. So if we are able to, break below that, then where can we go down to? Well, the next target below us is going to be down at 65.55, okay? So what I'm trying to do is I'm trying to give you some range-bound, swing market plays you can do right there on the DAX. Also trying to let you know if it breaks higher, what level does it need to break to go on up? If it breaks lower, what level does it need to break to go on down? And where will it go to in both scenarios, using magnets to help out with that scenario. Also looking at previous days' highs, lows, week's highs and lows, trend lines, fib levels, putting the whole diagnostic analysis package together for you to help you come up with a day trading plan. So, anyways, we talked about going down, breaking below 65.89, moving on down to 65.55. From that point, I would expect the bulls to really start coming in. However, if they lose, they're going to have their stops right around 65.30, okay? If we break 65.30, this is a key point for you. If we break 65.30, that's where a lot of the stops are going to be by the bulls. If we break that, then we're going to get a panic sell. And I would expect that to go all the way down to the August lows of 64.95. Okay? So let me show you that. Let's back out. Let's look at a daily chart here. And to show you basically what we're looking at. So I'm trying to lay out a few trades in advance for you. So when I'm going through what happened, I'm not just telling you what happened. I'm telling you what we expect to happen next. Okay? And just trying to give a little variety. But, you know, like, okay, what levels do I need to pay attention to? How can I play them? Where am I expecting it to go? You know, put that entire piece together. So, again, what I said, if on a big move down sell, if it breaks, you know, below 65.30, some of these levels won't work right here because of what we're looking at, but just that's okay. And if we move on down and we have that target, then what we're looking for, going back and looking at the August, okay, lows right here. So just so you can see the whole picture, you know, of where all these pieces coming from. And target on down to that 64, 95 area, but maybe even a little bit lower than that. But that was the main lows we're looking at first. So, again, if it goes in and it breaks below 65.30, we're looking for a move down to 64.95, 64.91, which is right around where these, you know, lows are, the low closes are on the week there. Okay, we actually got all the way down to 64.65, but my target would be 64.95, 91. Let me see here. Let me grab this and put this together. But that pretty much is going to knock out our simple FTSE plan for you, and definitely worth writing that down. Hopefully you got some of those pieces together on that. Okay, so let's go back on over to our 10-minute charts, and we'll check out a couple of the other plays that we could do. But hopefully you're getting a good list. I'm trying to give you as many things as I can. So the chart I have up is Z, the FTSE. So that's what we got on up there. Okay. Let's see here. Let's go in and let's look out at a few other things. And pull this up on a couple other markets before it's all wrapped up. So, okay, so if we go on in here and we look at, let's check out the pound. See how the pound's doing. See if we can put anything together there for you as a potential play. And there you go. Hit the wrong button, dollar CAD. So it's the pound dollar for you, pound dollar, there we go. Let's see here. All right, so looking at the pound, seeing what we have, sort of a choppy day. Not quite hitting the half deviations on either mark. Let's see, it held below the 63.40 level. And broke a little bit lower down. I was looking at the 62.50, 62.45 level last week, and bounced a little bit above that. And however, overall, we're still looking with I have a definite bearish long, medium, and short-term outlook right now on the pound dollar. Basically, selling pretty much any rally that shows up in the market. Immediate resistance we got right now is sitting right around 62, 65, 62.70. And as you can see, that actually served as resistance today as well already. We had that just about an hour and a half ago. So, I mean, if it does push higher, the most I'd expect is like 85 or 90, 62, 85, 62, 90. And I'm looking to short basically every time it gets right in that range. And let's see here. I'd take shorts on any kind of rally. I wouldn't be going long. I'd be shorting the rallies. If we got a rally up to, 63.33, I'd be shorting that. Buying back at 63.15. If we got to move it to 63.50, I'd be selling that. Buying that back around 63.30. The key support levels we're looking at today, 62.05. If we break below 61.90, so we haven't quite hit that down there yet, but if we break below 61.90, then I would look for continued weakness, and I'd hold on to any shorts I had currently on, and look for a move on down to 61.60. So, which, if that could break down, if it could break below that, we're really just trading tight. That's just so this plan may roll over into tomorrow. That could be a low for the day, 61.60. If it does decide to go any further, then the next target I would have would be 61.25 on the short side. Okay? So trying to give you a short plan and then how to sell it as it if it does do any of these rallies into these other points. But, some easy scalps in between this range right here, right around 62.60, 62.70. And just taking off, 20, 30 ticks each time. And then, but looking for that break, that big level we want is that break below 61.90. to give us, because that would be like about a 10 to 15 tick break below the support there at 62.05. So, and it's also, a half a deviation support level. So that'd be where we'd be targeting next. We break below it, nice drop. All right, that gives you a nice pound-dollar plan laid out there, sort of simple. Scrolling on in, let's see what we got over on the yen. So pull the yen on up, give you a little variety. And we'll dive that. Maybe we can look at some ags, we'll see. On the U.S. yen right now, basically got a little bit of a bullish, longer-term view, sort of a sideways view on the short term right now. Last week we bounced right up there at 108.50, and then we flew right through the resistance at 108.80, and just kept moving higher. Acted as a little bit of a support level now, 108.80, 108.85, and retested the 109.35s. Okay, that was last Friday. So taking that into today, just sort of showing you the plan there, and then scrolling on into today, where does that take us to? Takes us with the pause, we had a little pause in that bull trend. That's why I said short term, sort of neutral right now. A little pause in that bull trend, but ready for a break higher. Okay, so still got a longer term, medium term outlook, positive outlook, a bullish outlook on the U.S. yen. If we get a break above 109.55 going forward, I would easily expect, so right now, if we move about 10 ticks higher and we close above that level going forward now in the new day, I would expect to move on higher up to 109.80 or 85, and potentially even all the way up to 110.25. Later in the week, I would not be surprised if we broke that 109.55 to see a move on up higher up to 110.60. So those 3 points, 109.55 being that area I'm looking to break higher on right now, and going forward, okay, because we already broke up, pulled back. So if we get that next breakthrough, okay, and we close above the high of the bar that broke through it, we're looking for a move up to 109.80, then 110.25, then on up to 110.60. If we can't basically beat 109.40.50, and we've already basically beaten that, but if we can't beat it going forward, okay, then that's going to stick the market just tight in a range, and we could risk it sliding on back down. So I had the bullish outlook, but I'm going to follow the charts. If it does decide to slide on down, where do I think it's going to go? I think we're going to be moving down to 108.90, and I think most long traders at that point are going to have stops at 108.75. So we're probably going to have a good support area at 108.50 for another buying opportunity. So I'm not looking to go short. I'm just letting you know where I think it'll go to when it hits it, because I have this. I want to buy on the dips in a bull market. I want to sell in the rallies in a bear market. I don't want to buy on the dips in a bear market. Okay, so let's go ahead, and that'll wrap up U.S. yen for us, and we'll get back to you right after this. All right, folks, so come on back here to the Diagnostic Trading Hour. I had a question that came up here in the Tiger's Den, and they're a little bit confused. You go in, and they're in the trading contest, and they're at $25,000, okay? And then let's say you put on a trade, and we'll just say it has, we'll do $500 risk, okay? So you put that trade on, or let's say it has $800 risk. Live that way, okay? And even though I don't, agree with holding to expiration, we'll just say you did. So you're at 25,000. Really you're that didn't do it right. There we go. So you have a balance of 24,200. That trade then closes out profitable, and you get a payout of $1,000. You got your $800 of risk back, plus you got your $200. That makes your balance now 25,200. Let's see here if I can make this thing add up right. All right. Okay. So, but then you put another trade on. And this trade has, let's say, $500 in open risk, okay? So we'll call this margin. Do it that way. We'll call this payout, okay? So this is debit margin. And then you got another debit margin. And so now your balance says 25,200 minus 500. I can't do it to save my life. Okay, let's see here. Equals that plus that. There we go. So now you have a balance. Balance is showing negative from your original deposit, 24,700. However, you look at this position. Notice you have a debit margin. You haven't closed the trade yet, and you're up. It says open P&L of $20. you're like, wait a minute, I'm up 20 bucks on, I've only done 2 positions so far. I did one, and I got a full $1,000 payout. I did another one, and I'm up 20 bucks on it. So I got full payout on the last one. I'm up 20 bucks on the current one, but my balance is showing like I'm losing money. Okay? Well, that's because your margin is fully collateralized. That's why your trade is your stop, your risk can never increase, and you don't have to worry about ever losing more than what you put up. Well, let's say you just went ahead and closed out the trade right now with a positive $20 balance, then what you'd see is a $520 credit, okay? So credited, balance, back, and now you're at $25,220. So you are still positive in your account. If those are the only 2 trades you made, even though your balance says 24/7, remember, all your risk is fully collateralized. So if you had $500 risk, that would have brought you down to 24/7 on your balance. But when you close the trade, if you were profitable, you'll get not only that entire debit amount back, but you'll also get your profit back. Or let's say you lost some money, and let's say you go in there and by the time you close it, you lost 10 bucks. So it goes to 490, you get 490, whatever. Or let's say you lost 200 bucks. So 300 is your payout. You lost $200, you closed it out, you're back at 25,000, okay? If you went in and you lost $300, you only got 200 back, you're down at 24.9. If you got it all back, 500 plus the 500 maximum profit potential on say 10 contracts, you're back up at 25.7. So what would that mean? Well, that would mean that right here, if you put up 500 and got 1,000 back, that is a $500 profit. Plus you put up 800, you got 1,000 back. That's a $200 profit, showing you at 25,700. So it's just understanding that the risk collateral is taken out of the account balance and it's not put back in the account balance until the trade is closed, settled, et cetera. That's just basically how the balance works. You'll see this work as well when you do like call options, put options, things like that. You'll see available equity. And they just don't have a side thing saying, hey, you have a credit amount of this amount and all that stuff. But keeps it simple. Basically, that's how much you got if the worst thing happens. But if it comes out better, then, of course, that amount can go back up by your entire risk plus a potential profit on top of that, as long as you're able to close it profitably. All right. Have a great day, and I will see you tomorrow right here on the Diagnostic Trading Hour.